Okay, so right now we have we are just a little early, so we will have time for the discussion. Please keep your questions for we will make the discussion quite open, but like we'll probably stop after about 30 minutes or something to open the floor for questions. If there are no questions, we'll just maybe keep discussing. So I'm very happy to be moderating this panel. We'll talk about blockchain adoption in the financial sector. Okay, so it's going to be a little bit less academic, but more practical. And I'm sure there will be some very important and interesting insights from practitioners. So with me, Meglena Grueva from Mazars. Can you just maybe introduce yourself in a few minutes?
Thank you. Thank you for inviting me. It's a pleasure to be here. My name is Meglena Grueva. I serve as head of digital asset solutions for Mazars in Germany, Forvis Mazars since last week. And I also lead our EU-wide regulatory compliance offering for digital assets. Here we have in mind MiCA in particular. I have been with Mazars for the last 7-8 years. My journey in blockchain actually is underpinned by formal university education in both IT and finance, as well as in blockchain and digital assets. Before joining Mazars, I worked at the European Central Bank, where I developed pretty good understanding of the regulatory framework, supervisory framework for the financial institutions in the Union. And in the years with Mazars, apart from consulting traditional financial institutions, I work with digital assets custodians, exchanges, issuers of stablecoins or other crypto assets. I basically help them navigate the regulatory sphere in the Union. So I'm happy to answer any questions.
Thanks, very interesting. I'm sure you will have very important insight to share with us. And next to you, Taieb from Crédit. Can you introduce yourself, please?
Hello, everybody. Actually, from Crédit Agricole Group.
Okay.
I'm Taieb. I'm working with Crédit Agricole SA. Basically, my role is to coordinate all the blockchain initiatives within the group entities. The group is a very big group with more than 80 or 90 entities. And I'm responsible for coordinating all the projects within the group. My background on digital assets, as we are talking more about digital assets and financial market, I was the initiator for the Crédit Group digital custody offer that is presenting today. And also I worked a lot with our banking investment of Crédit to offer to issue some experimentation that I will talk about later on. And now I'm heading the team that works on blockchain initiatives within the group from innovation side actually.
Thank you very much. So again, as I was saying in the beginning, we'll try to focus the discussion on the infrastructure and its use in the financial sector, and also we'll talk also, of course, about a little bit about the regulatory aspects to it, especially from the European perspective. So maybe to kickstart the discussion, I'd like to ask Kais, what are the recent projects you've been working on, and what are to you the most promising recent projects you've been working on at Crédit Agricole?
Yeah. So thank you very much for this question. I think I will give you more about some projects that we've gone through in the last few months and years. but only on public area. So basically, we worked on the first initiatives from Banque de France to work on central bank monies. That was with the projects that started on 2020. The idea was to be able to make some delivery versus payment for the digital assets using some kind of central bank monies, tokenized central bank monies, if you want. That was during, we have 2 projects in that time. And then 2 years ago, 2022 and 2023, we worked on with the investment bank, which is Crédit in our case. We worked on issuance of tokenized bond to the European Investment Bank to make it to make this issuance based on a blockchain that we created for this issuance, based on it's an EVM compatible blockchain, but we wanted to make it a little bit further going to the green area, because we wanted to have this a specific consensus on this blockchain with let's say the person who can validate this kind of transaction needs to be less using the power and the energy to make the transaction happening. So these are the 2 first projects, and also we worked on custody for digital assets with the custodian of the group, she's Crédit, who is offering a kind of services of custody of digital assets when it comes to financial digital assets, so financial instrument, tokenized financial instrument, and also for cryptos. This offer took like some 2 years to be live for several reasons, and the entity was requested to get a status of PSAN registration in France, waiting for the MiCA evolution in the next few months, actually.
Okay, thank you very much. Maybe a quick follow-up question. You mentioned this project with the EIB with building your own blockchain. I mean, as far as I understand, right now there are some public blockchains that don't consume a lot of energy and things like that. So has your view changed on that? And do you see public or more private and closed blockchains being used in the near future?
Yeah. So basically, you need to remember that we were 2 years ago, 2 or 3 years ago, the beginning of this subject, and the energy consumption was really very a big issue when it comes to blockchains, and that was also the point for to start this kind of initiative. However, to answer your question on private versus public blockchains, what I can see is that from our perspective, we see a lot of initiatives going more and more to public blockchains, which is some kind of a U-turn that regulators and central banks and institutions are trying to take right now. I think that for a couple of reasons. The first one is that I think that these people are looking to public infrastructure, public blockchain, as more resilient, more stable, more let's say with less security issues and this kind of things. Even though the public blockchain still suffer from the difficulties to handle the transparency versus confidentiality issues. And this is where we see the development today on this kind of initiatives, based on a lot of development on public blockchain, using rollups with all the kind of layer 2 systems to manage the privacy against the transparency and manage the side of information that we don't want to share it with everybody.
Okay, very good. Thank you. Meglena, can you maybe also discuss about the most promising use cases of blockchain and digital assets in the financial sector? And of course, if you want to rebound on what guys just said, feel free to do it.
Yeah, thank you. Well, most of the applications are in finance. It's a ledger, after all, the blockchain. So one of the most recent, like in the last weeks, I see a lot of publications on tokenization. So one application is tokenization for financial securities, for assets that, like real estate or commodities, that would bring, like, of course, the 24/7 full access to trading, as well as the immediate settlement and all the other positives, fractionalization that doesn't exist with the regular real estate, for example. All of these benefits that come from blockchain are there due to tokenization. When we talk about tokenization, again, I think yesterday I did a very quick search. The predictions I saw for 2030 is to have 16 trillion. One of the research said, another one said 13 trillion of tokenized assets on the blockchain, which sounds great, but in order to take advantage of that, we need to have money on chain. So it is important to put actually our traditional money on chain, and here we have to think about tokenized deposits. That's one application where we have quite a lot of banks working on in this area already. We have the stable coins that Mika now sets the regulatory framework for. Then we have, of course, the CBDC, wholesale or retail a bit more controversial. Again on CBDC, but still it's money on chain. Again, when we talk about CBDC, on June 14th, the Bank of International Settlement published a paper stating that over 94% of the central banks in Europe are presently working on CBDC, most of them on wholesale. Over half of them have a working pilot, which is a big deal. So potentially we could have public money on chain, and we need definitely public money on chain, if only wholesale to settle the transactions. Another implementation would be, for example, for capital markets, of course, where if we put the capital markets on chain, we can take full advantage of like transparency, the immediate settlement, the reconciliation done not by an institution but by a consensus mechanism. We can have also, we can talk about DeFi that we spoke recently. We had a paper on that by Lorenzo. DeFi is another implementation of blockchain. Here we have the move from TradFi to DeFi is like moving from a centralized financial system to a peer-to-peer system where we can have interactions directly. Another one would be we can put, for example, your identity on chain. Here, if we have the identity on chain, we can have very easy KYC, AML processes, and a lot of other compliance processes set up automatically from here. Blockchain could have a pretty good implementation for regulatory and compliance as well, because once we have, again, everything in the transparent ledger, way less work for auditors. I know we're an audit company in general. But then another implementation, of course, that is already pretty big is trade finance and supply chain management. I believe there's quite a lot of offerings here already by JP Morgan, I have seen. IBM, of course, for quite a few years has offering there, and also Walmart. So what happens, you put all the documentation and everything on chain, you streamline the processes, you have immediate follow-up. And these are some of the immediate examples that come to mind.
Yeah, thank you very much. So we'll come back to. Sure.
Of course. On this one, and I completely agree the points that Meglena just mentioned. I think there is two other items at least that are popping up right now from financial institutions. Mainly, the first one is the management of the collateral for all the banks, which is a really big issue. Based on tokenized systems, we can have a lot of gains within this area. There is a lot of works on this collateral and then repo and all the related points related to collateral. This is really for financial institutions is really a big area of enhancement. And the second point, which is coming to many discussions we had recently, is for the tokenization of fund shares. Basically, we see a lot of initiatives right now going for all the tokenization on fund shares, meaning that the fund share is not is tokenized and you can use it as a token. The initiatives that we could see are coming mainly from the US right now, but we see a lot of things happening in Europe as well. And there is a lot of, let's say, initiative which are not on MiCA but on the regime pilot, which is related to the financial instrument rather to the cryptos, which will allow to be able to use this digital money on chain to settle the digital asset like funds or whatever that could be totally on chain, and then you can gain all the operational let's say benefits from it. Thank you. And just to come back to the initiatives on wholesale CBDCs, because there is a lot of ones like that you said. BIS is launching a few of them, but you can remember the last December we've seen RFP from the central bank, European Central Bank, for the wholesale CBDC digital currency, where 3 central banks in Europe has proposed different solution based on blockchains, and majority of institutions in Europe are participating to these tests and to this experimentation. And the idea is to see how in the future we can settle or we can exchange money between institutions using this new form of digital money between institutions. So I think this year, 2024, we see many projects on wholesale and digital money for not only for the retail but mostly for wholesale actually.
Yeah, thank you very much. So a lot has been mentioned here. I propose we will talk about the cash on chain and maybe make some clarification. But first, maybe we can just expand a little bit on the tokenization of assets in general. We've seen a couple of weeks ago, maybe, or a little bit more, the US markets has moved from T+2 to T+1 settlements. From the blockchain perspective, it sounds totally crazy. I mean, I don't know exactly how much they spend just to move to T+1. On blockchain, you can technically reach T+0 or even T+ a few minutes. So do you think, given the way the infrastructure is set right now, it will be possible to really go and reach what you mentioned, Meglena, about like the trillions of assets living on the blockchain? Is it something like, is it a dream, or is it something that will really occur at some point?
Well, I hope we see it at one point. Right now, it's probably not still as... Okay, scalability is still an issue with blockchain. That is the reality. And all of these examples that were that were shown 2-3 years ago, that okay, Visa can process that many transactions, how many can Bitcoin process or Ethereum? It's not as bad as it was 2 years ago, but it's not as many as in Visa today still. So there's still, I hope at one point it does get to that point when it's T+0. The technology develops extremely fast. There is the potential to have this. The thing is that we presently have a lot of legacy technology with the financial institutions, and blockchain technology is not cheap. So, and a lot of these big financial institutions, even if they want to participate in the blockchain, they need to run in parallel both systems, and that makes it even more expensive for them. So it is, we will get there. It is happening very fast. Technologically, the developments happen very fast. We have a lot of very good layer 2 solutions today that actually can afford that, and that can afford to work on the public blockchain, for example, while offering security, or like the zero knowledge truth or stuff like that. It is happening. I cannot tell you when it is going to be a reality. I don't know if you can.
Maybe.
Go ahead.
Just, I mean, to drive the follow-up, like, who has the, so Kais, who do you think, I mean, what's your view on this, and who do you think has the most incentives to actually build this? Like, will it come from the incumbents? Will it come from large banks? Will it come from the custodians, the markets?
Yeah.
Which actors will benefit from this?
I'm pretty sure all the actors will benefit from it one day. That's for me is for sure. However, we don't know when and how this will be seen. I'm just looking to the curves, the adoption curves, if you want. We are still in the beginning of this adoption curves, and we can compare it to the internet adoption curves, and we will be like in early 90s actually. Comparing the internet adoption curve to the blockchain activities on digital assets over blockchain in this area. However, if we could see the numbers of the volume of tokenized assets that are projected between 2030 and 2035, we could imagine something around 2029, 2030 to have this kind of adoption. But this is still looking into crystal ball and giving the answer. And now, who could do it? As just been said by my colleague here, managing the two systems is costly. You have to maintain both chains, traditional chains and new chains that you are building. So it's not, you will not gain economically in the beginning. However, the gains that are brought from operational aspect, only to operational aspect, that came from using blockchain itself, many studies are placing it between 30 to 40% gain operationally when you have tokenized asset compared to the traditional asset, mainly because everybody is using the same data at the same moment. No wait for any consolidation or matching or checking or whatever. Everybody have the same golden source, and the point is that the system is becoming asynchronous. You don't need to wait for someone to send you a message just to validate the fact that he already done something. Everybody has access to the same information at the same time. So to come back to the T+0, as you mentioned, coming from T+3 for delivery versus payment to T+1 today in the US is a nightmare. It's very complicated, very costly. And you could imagine if you can go to the T+0, what will happen. And for me, the only way to make it is to go to a solution like what we are proposing with the blockchains. This is the only way to make it even better, because you will be on real time or quasi real time. Okay. Now, who needs to go further? I think we have all the participants need to get into this area. We have a lot of discussions with the institutions or European institutions right now, and the subject is on the table to see what they could do, if it's new regulations or new guidance or whatever, how to push this kind of initiatives, because in the end of the day, looking to this from risk perspective, coming from T+3 to T+1 then to T+0, you make it very, very low risk operations on the financial market, and you can see it at least from this area. You have less and less counterpart risk when you are transacting between big entities. So I think there will be a push from regulators, from big institutions. I think also that incumbent will have very crucial role to play, because they will push the existing institutions to go further, because they will push them for sure. And the big institution, when they will be ready to move, the curve will be very, very impressive to see.
Let me just maybe rephrase a little bit my question, but I get that if it's beneficial for the users and if there is infrastructures, they will at some point move and adopt this new technology. But who do you think is in best shape right now, or at the best spot to actually build infrastructure? Another way to frame the question: will everyone be using the JP Morgan blockchain, or everyone will be using a mix of a public blockchain like Ethereum with some roll-ups or some additional features? But who do you think will build this? Or is it supposed to be the users, like the banks? Or is it supposed to be the exchange, like the NICE, Euronext? Or what's your view on this?
I have seen actually quite a lot of push from the supervisory bodies. There is a project Agora being announced by Bank of International Settlement, which is exactly on that, immediate settlement on the blockchain between public money and private money. Big financial institutions like Crédit, Agricole, or other large banks like that definitely have a say in that as well, and put their own efforts. But I believe it probably is going to be pushed in one way or another, because like Kai said, it's obvious the benefits are there. It is obvious that there are cost savings. It is obvious that the settlement risk is not there when you have immediate settlement. So it's that is visible for the supervisors as well. So they're pushing as well. Banks want to take advantage of the cost savings. So I think these are the two groups that are going to work together to set it up. I don't know if that answers your questions.
Yeah, sure, it does.
Yeah, maybe to add something here on interoperability. Yeah. I think this point is really very important, and we just discussed that with the European Commission last week on some workshops, and many ideas around interoperabilities are happening. What my opinion here is that we need to work, at least from banking perspective, we need to work to standardize the product itself, like how tokenized product, financial product needs to look on blockchain. We don't need to go into on which blockchain it will be made, on which technology needs to be. I think we need to separate two layers, the layer of the technology and the layer of product. And when we see it from that area, we will be really very, we can see two layers, one on the smart contracts, the one which is specifying the product itself, the characteristics of the product, and then we can imagine that this product should be working on any blockchain or any technology, if you want, without linking it to the system itself. When you say that, that means that whatever the technology below, you will be able to make your system running. Just to come back to this internet story, we can. I don't know who is looking today if you are connected to an intranet or an internet. Nobody's caring about it, because just your browser is giving you to the access, whatever is the access, internet, whatever. It's not your problem. You just want to get the information, the data that you want to get. And for me, we need to standardize this area, this layer, and then we need to separate it from the technology which is based on.
Okay, very clear, very interesting. Maybe we can move now to the hot topic of stable coins. Soon Mika will enter into application, and we have been mentioning earlier in the discussion CBDC, stable coins, tokenized deposits. So maybe, I don't know who wants to go for that, but can you clarify a little bit what do we mean by exactly like CBDC, stablecoins, tokenized deposits, and how, I mean, do we have to choose between one of them, or will they all be live and having to be interoperable? And
do you mean from a regulatory perspective as well to add, or just what it is?
maybe after, but
okay.
start just to make some clarification. What is?
So tokenized deposit. These are our deposits in the banks that we have right now, with Deutsche Bank or I don't know, Bank of America, Crédit Agricole, and then Crédit Agricole or Deutsche Bank tokenizes them, or part of them, or some of them, and gives you the right to basically operate with this token. This is tokenized deposit. What is the next? Stablecoin. Stablecoin is a token again whose value purports to a stabilizing mechanism, and it is stabilized by a different asset. It could be like a fiat, one or more. It could be commodity. It could be other cryptocurrency, basket of all of these, and that's a stable coin. And what is the last one? CBDC, central bank digital currency. So this is, when we talk about money, we know we have two types of money, public and private money. So now about retail CBDC, the public money is basically the public money that we have are the euros and the euro coins that we hold in our wallet, because our bank accounts, these are private money, these are public money. So with less and less cash being used, the European Central Bank said, I want to keep the connection with the citizens of Europe, and I want to issue a retail CBDC. And this is going to be, again, retail CBDC is going to be public money. You are going to have, and I are going to have a claim towards the European Central Bank that issues it, just like we have the same claim with the 10-euro bill that we hold in our hands. Because otherwise, with the 10 euro in our bank account, we have a claim towards Crédit Agricole or Deutsche Bank. And then wholesale CBDC, these are practically reserves, bank reserves. Right now at the central bank is only banks that can have accounts. They hold reserves. And we can look at wholesale CBDC as tokenized reserves, bank reserves. So these are, I don't know, in plain words, if it was clear.
Yeah, for sure.
Regulatory-wise.
So when we talk about also the regulation, of course, but when we talked about the ability to have cash on chain to make a pure on-chain settlement with the asset and the cash side. Will that work only with public money like CBDC, wholesale CBDC, or can that also work with stable coins, and what's the...
It should work with all of it, just like it works with public and private money today. But they're not on chain, they're just like bank accounts, yes, sorry.
Maybe you can add a few other specific items to the CBDCs, to the stable coins, and to tokenized deposits. And you can see it, for example, there's new kinds of things happening right now. You may be aware that BlackRock, for instance, has issued a money market fund, tokenized money market funds. Yeah. This could be also used as a way to exchange things, to exchange value, because it's low volatility, and you can have as an investment things. So you can use it as an exchange for other things, for digital other things. So you will be putting swaps on the blockchain to make DVP happening. You can see also other technologies that the group is looking to, which we call using the blockchain as an infrastructure. So your account, instead of issuing tokens on your account to get it on chain, you maybe use the system which is handling the account itself is the blockchain. So instead of we open to you an account, a normal account, we'll open to you a wallet. This wallet is in the system of the bank, and your account will be used on the blockchain directly. This is some of the areas of development that the group is looking to, and basically you can see that this will encourage the banks to go very fast when it comes to their what we call the exchanges between banks actually. Like just to corresponding banking, I'm just looking to the name. So in this area, if you make the blockchain as an information system used by all the banks, or at least a consortium of banks on this area, all those banks will be able to exchange all the liabilities between them instantaneously and very quickly, and this make this kind of corresponding banking structure works even cross-border. So these are kind of things that could be also added to the CBDCs, to the stable coins, and to wholesale CBDCs generally.
Very interesting. And so, and now if we move to the regulation side of it, so with MiCA being implemented, like I guess in a couple of weeks, I mean it will be an application, yeah. What do you think? I mean, we don't have time to go through MiCA in much detail, but very broadly, what will be the impact of MiCA? Do you think on this ecosystem, and especially on stablecoin? For instance, Tether and some large stablecoin issuer have already, I think, mentioned that they don't want to be regulated under MiCA. Yeah. How do you think it will reshape?
It will be expensive for them. Honestly. So MiCA only regulates stablecoins, not tokenized deposits, not digital, digital euro or CBDC in general. These go under different regulation. And yes, MiCA sets up a bespoke regime for stablecoins. It sets up two types of stablecoins. It defines two types of stablecoins: asset reference tokens and e-money tokens. E-money tokens are tokens whose value is based on only one fiat, and asset reference tokens are all others. Basically, the value should be referenced by several fiats or commodities or a basket of everything. So these are the two stable coins defined by MiCA. And the regulation basically is like MiFID but for stable coins. So it sets up the requirements for the white paper that has to go to the NCA. It sets up requirements for authorization for operations. It sets capital requirements, prudential requirements. It sets requirements for insurance, market, KYC and AML processes. It is very, very heavy regulatory, I believe, on stablecoin issuers. It sets also rules about who can issue the stablecoins. That also makes it additionally complicated. For example, e-money tokens could only be issued by entities licensed as an e-money under the EMD regulation in Europe. This is. It will bring potentially some of the stable coins that cannot comply. We have seen already examples like this are being withdrawn by the exchanges. They're not offered to EU citizens. This started, I think, a month ago, back in April, when we had the Paris Blockchain Week. Was the first time I saw that OKX removed USDC for EU citizens. Then we will probably see I think there might be some banks are in a better position to enter the business of stablecoins because they already have all the processes that are needed to set up. They know how to set up processes. It's their thing. They know how to comply with regulation. They're actually in a better position. And if you look at a stablecoin issuer that is not a financial institution, hasn't been until now, and they have to now start complying with all these requirements, it's a very steep line for them. It's not impossible. It's just going to be time-consuming and expensive, and they have to get licensed. They have to be set up in Europe. There's a lot of requirements. I do not know how much time we have. I can talk about MiCA forever, but I do not want to bore anyone.
Yeah, I mean, I don't know, guys, if you have some quick follow-up, and then we will just move open the floor for questions.
Maybe I think that MiCA will change things because I think we'll see a lot of institutions coming from the US and from other countries coming to Europe. The idea behind that is, even though the MiCA is really a lot of constraints related to this regulation, a lot of things to be done to obtain this kind of license and to be able to issue something. I think also from institution and from players' point of view, this will bring stability to the system. Meaning that for the couple of institutions that will go to this issuance area, they will have at least a very strong regulation that will cover them in any case. That's also a good point for the industry. Also, we can see that, at least from what we see in the market, many people are announcing they are coming to Europe because of the regulation, not against the regulation, just for the regulation, actually, not because of it. So I think we will probably see a lot of things happening on the market, some coming out and others coming back, but I couldn't see any big ones for issuing stable coins will not comply with it in the next 2 years, basically once the period of fuddling period will end. So I think everybody will comply to this regulation, at least if you want to get into the European market and to get this good regulation covering his activities.
It's also a good example globally, to be honest, because a lot of other parts of the world are looking into setting up such rules. US, like you said, published a proposal. It's not far from what we have here, so it is kind of like a setter, trendsetter in a way.
Yeah, thank you very much. So the discussion was quite rich, but there were also many points we could not discuss, like regulatory competition, as you just mentioned, also the role of DeFi in this system and everything. So I'd like to open the floor for questions from the audience. We have about 10 minutes. We can also just continue the discussion, but we're happy to take questions if there are some. Yes.
Okay, thank you. I have a question. Maybe you already mentioned it, but I didn't get it. How will the central bank digital money mining work? And will we have the same reward mechanism like for the current decentralized platforms? Thank you.
What is it? How will the central bank digital money work? And what is the mechanism for what? The mining.
The issuance, I guess.
Okay.
Issuing
issuing or mining? So the central bank the digital euro will be issued by the European Central Bank. So there's no mining. It is like the same as the euros that you have today. You have to earn it by work in general, I guess. And then instead of cash, they're going to be in your digital wallet, which is like the Apple Wallet that you have today. So there is it's supposed to be a two-tier system. The European Central Bank issues the digital euro and keeps in their balance sheet the running euros. And then the PSPs, or the payment service providers in Europe, which could be banks or any others that comply with the requirements of the central bank, are going to be facilitating the process. They will be managing this app, this Apple Wallet that you will hold to hold your digital euro in. And if you want, you can connect this app to your bank account. You can have this app directly from your bank account, I guess. There are different options stipulated by the ECB. You can, there's a limit of how much you can hold. There is the option to have a waterfall mechanism to run money directly from a euro account into your app for digital euro, or vice versa. It's called reverse waterfall and waterfall mechanism are already approved. Is this anything else? Is this clear? Do you want to add something? I think
maybe we are more about minting than mining, you know. And this is just
The mint?
It's the way central bank are issuing money. They are just minting something. They are issuing some tokens. They are writing down in the blockchain some tokens. All of that is on their hands, actually. It's like today when a central bank is just printing something.
Money, yes.
They are printing money, if you want. Instead of print it on a kind of paper, they just print it on a token.
On the blockchain.
There is different
discussion there.
There is a lot of discussions. Maybe for the digital euro, we don't know even if it will be a blockchain.
That's true.
Could be something else. But for the wholesales, there is many initiatives. Today, Banque de France is making its own system, which is DL3S, DL3S, I don't know, which is the more known on blockchain that the central banks are using today. We are talking also about a unified ledger coming from BIS and from other central banks. We have 7 central banks and 7 central banks and 4 monetary regions: Europe, South America, Japan, and I don't know which is the 4th one. Working on a ledger, a different ledger. But there is a lot of initiatives on this area.
No, it's not going to be decentralized validation. This is central bank money.
I think they explored that a little bit in the beginning, but they quickly moved to a centralized system.
Yeah.
I think in Australia they tried to digitize all the stock trading and everything on the blockchain, and that failed. So what can the government do to make sure that this transition eventually works?
We are talking about ASX, maybe. This experimentation, it's really very interesting to see. It happened 3 years ago and started a little bit before, and as you said, that failed. There is many things that make it fail. I'm not sure that we'll cover all of them, but I think they happen with very low regulation around this area. So there is low standardization and approach from all the entities. So the fact that the ASX has its own system, its own way to do it, and also they worked on some kind of private blockchains. I think that was really the problem, is that they are 2 or 3 years in advance compared to today. I think the point is that the fact that the institutions today are looking to tokenization is really very new. 2 years ago, it was very in advance, and maybe if they relaunch the same thing today, that will probably work.
Did they have money enough to pay these securities on chain back then? I mean, did they have money on chain, or was it like?
No, they don't have money on chain. This could be one of the other items, but they spend a lot of money, many millions on that project.
Okay, maybe we have time for one last question before we go to the coffee break. Yes.
Yeah, so it would be very interesting to hear your view on CBDC with regard to financial stability. I think there are some academic papers showing that, in particular, central bank digital currency seems to affect not so much the banking sector, but the payment sector. So payment firms seems to suffer a lot from the introduction of CBDC. And this might make transactions very cheap for customers. I mean, if you go to a shop and if you pay with your Visa card, it's quite expensive. If you can buy with central bank digital currency, this makes it very cheap, also from the store side. So I would be very interested to hear your view, basically, on how this might affect financial stability, or in particular banking stability. So maybe from a banker's perspective.
I can start?
Yes, please.
Okay. So financial stability, one of the ways they try to mitigate this is through the limit, right? The 3,000 limit per person EU citizen digital euro. That's one way, but yes, there would be implications for the banks, hopefully not for the financial stability. In any case, yes, the proposed legislative documents that came last year from the Commission on the digital euro is very controversial in ways because it puts the European Central Bank in a competitive position with the payment service providers that would be actually facilitating the distribution and of digital euro. So they say that there is a limit of how much you can charge as a payment service providers, and it has to be cheap, and this is not fair market competition. So this is why we have the backlash from banks. I mean, apart from being asked, apart from the fact that they would have outlay of deposits and all the other consequences, they would actually have to build a system and facilitate payments, and they do not even know when the positives, when the revenues of this system are going to come, right? So yes, there is still ongoing discussions. There is a lot of articles out there, always published, and everyone asks for, at least for my opinion on that. We're talking about retail, not wholesale CBDC here only, just to clarify. So yes, there is the possibility of some shake-up. The research papers that come from Bank of International Settlement actually say that that is there, but it should be to a certain period of time, and then it should like smooth up, and the system will continue to operate as is, or like as is then. So it is not supposed to ruin the financial system according to the research from the regulator. So I do not, but then the research from, for example, EBF, or like the banking lobby is completely different. I think there could be some consequences if you want to put in.
No, it's exactly what you said. I think if you look at it from banking perspective, it's kind of, let's say, a lot of cost related to it. Balance sheet which is impacted, fees impacted, and if you look at it from central bank, they have more balance sheet there, and they less fees for the retail from retail perspective, and also you can see it from Fintech and from big let's say gatekeepers that could enter to this area as well. And replace somehow or disintermediate banks. So there is a lot of questions around that, and that's why many papers are trying to study this kind of impact on the money. But again, this is only for retail digital currencies.
Thank you. Last quick questions. Quickly.
Thank you. We'll try to be quick. I have a question about the infrastructure of wholesale CBDC. So if you look at open market operation, currently now the central bank will purchase some securities in exchange of reserves. Now imagine we move to a CBDC design, wholesale CBDC again. So do you think that both legs will have to occur inside the same ledger, a ledger that will have wholesale CBDC and assets, different assets, so that you can settle everything immediately, or do you think there should be one ledger for CBDC and another ledger for, I don't know, the securities, meaning that will make it much less efficient, but maybe more realistic? What do you think is going to be the likely scenario?
Yeah, I can go. Basically, when we started discussing the wholesale CBDC initiatives with the central banks, there was 3 initiatives, as you said. First one was everything is on one blockchain, on one system. Second one is bringing 2 systems, and you have something in the middle, making it as HTLC protocols being on the things. And the third one is kind of a mix between on-chain on one area and off-chain on the other one. I don't think that the point is already taken. There is no decision until now. But the initiatives that we see today with the European Central Bank are mainly there is a separate blockchain for the cash system, wholesale cash system, and another one for the asset leg. And the idea is to build all the infrastructure between to be able to go from one blockchain to another. That's the way the solution of Banque de France is working. However, there is other alternatives which is a little bit different. But for now, I do not see everything in the same blockchain for several reasons. Because at least the central banks will need to keep their hands on the issuance on everything. And if you want to issue, I don't know, an asset, digital asset, not currency, you need to have private ways to do it, and you are not obliged to go to the central bank systems. So I don't think this system will be realistic, at least right now.
Yeah, and each blockchain has different characteristics, so, and you use the blockchain that fits your use case. So that's why, yeah, as Kai said, it's most probably not, it cannot be on the same. They should be interoperability.
Yeah. Even though there is some solution that were discussed 1 year ago, but I didn't hear about it right after. That was really very in the beginning when they stopped it there.
All right, thank you very much. So I think it's time for a coffee break. Let's thank our panelists and also the speakers from earlier.